Yes guys, now let's see the rules for segregation of credit. How much credit is to be allowed and how much is to be disallowed when you use the inputs or input services or capital goods for business and non-business purpose, or for making taxable supplies as well as making exempt supplies, right? So let's start. First we'll see rule 42 and then we'll go to 43 also. Manner of determination of input tax credit in respect of inputs or input services and reversal thereof. The input tax credit in respect of inputs or input services which attract the provisions of subsection 1 or 2 of 17. So 1 was business and non-business, 2 means taxable supply and exempt supplies. Okay. It is given there, being partly used for the purpose of business and other purposes, this is subsection 1, or partly for affecting taxable supplies including zero rated, I had explained this point in the last lecture, and partly for exempt supplies, shall be attributed to the purpose of business or for affecting taxable supplies in the following manner. Now it's a long formula, and should I explain it before we study, or should we study and then I should explain? Let's understand first. Let me explain it first, so that when we'll read you will understand the complete thing. So let's see. Now here you are making supplies, so there is non-business use. Don't write anything up. First let me finish, then exempt supplies and taxable supplies. Okay, these three are your usage, and your inputs are A, B, C, D, E. Don't write, because I may change in between. Now A is an input, and suppose there is a tax paid of 100 rupees on each of these. Okay. Now A is used exclusively for non-business use. B is used exclusively for exempt supplies. So there will be two types of inputs, as you can understand now. One is which is exclusively used and one which is commonly used. There are common usage inputs and there are exclusive usage inputs. Okay. Now let's take examples so that you can imagine. We are making sweets. So we are making gulab jamuns and rosogullas. Okay. And then there is a non-business use also. So we have a shop. So imagine that we have a shop, a sweet shop. Okay. And from there we are selling two items, gulab jamuns and rosogullas. Now let's write it there. For example, rosogullas in Bengali are called as rosogullas, in English they are called as rasgullas, are exempt, and gulab jamuns are taxable supplies. Then what is non-business use? Non-business use means house. Okay. Now A is something that we bring, and which is, so this is a shop and adjacent to shop is our home also. So A is something which is used exclusively in house, not for business purpose. That is A. And suppose there is a tax of 100 on it. Will you get credit? No, absolutely not. So anything which is exclusively used for non-business use, there will be no ITC, right? No input tax credit. Then comes B. B is exclusively used for manufacturing rosogullas. There might be some input which is used only for Rasagullas, which is not used to make Gulab Jamuns. So that is called B. Such inputs which are used exclusively for making exempt supplies, will you get credit on them? Of course not. So again, no ITC. Okay, so no ITC for two things. Then C is an input which is prescribed in section 17(5), that is blocked credit. So if it's a blocked item, then of course no ITC. Whatever the use may be, whether it is used exclusively for business, non-business or taxable supplies, it is blocked, so there is no question of ITC. So that is a block credit. D is exclusively used for making taxable supplies and it is entitled for credit. And E is a common one. It's a common, like sugar. Example can be sugar. Sugar is used in all things, to make Rasagullas also, to make Gulab Jamuns also, and my wife takes some sugar out of the shop for house use also. Okay, so sugar can be an example of common goods, common inputs, right? So there are in all 5 types of things that can be there. Again, I'll repeat: A, exclusively for non-business use; B, exclusively for exempt supplies; C is a blocked one; D is exclusively for taxable supply; and E is a common item, right? Very good. So on the first 3 things, we are not getting any ITC. In formulae, these will be called as T1, T2 and T3. So these 3 things are not entitled for credit. Okay, T1, T2, T3, 100, 100, 100, 300 rupees, no credit will be allowed. Then regarding D and E, D which is exclusively for making taxable supplies and E which is common, you will get full credit. So first you have to take full credit of 200 rupees. So we'll take credit, avail input tax credit of 200 rupees. That is D and E. 100 plus 100, 200 rupees credit will be allowed. Fine. So do one thing. You pause the lecture and take down this thing first. Okay. Pause the lecture and take it down and then continue. So I'll continue. Okay, so now you have availed ITC of 200. Now the question is that out of this 200, 100 is of D, and for D, which is exclusively used for making taxable supplies, you should get full credit. There is no question of not getting credit, right? So that 100 rupees credit is fully allowed. So regarding D and regarding E, these are the 2 things. So 100 rupees which is of D is called as T4 and full credit is allowed. Means there is no reversal here and we can use it. But E which is there, item E, which had 100 rupees of duty and we have taken full credit, right? This 100 rupees is to be segregated. This is T4, fully allowed. And this 100 rupees will be segregated because it is common use, right? So it will be segregated in 3 parts. For non-business use, the rule says that it will be deemed to be 5%. 5% of 100, that is 5, will be deemed to be for non-business use. So that much credit will be disallowed. Then for making exempt supplies and for making taxable supplies, right? So how much for exempt and how much for taxable, this will be apportioned in the ratio of turnover of exempt supplies and taxable supplies for month. So this is to be calculated every month or whatever is your tax period. If your tax period is a quarter, then we'll take quarter wise. If it is month, then we'll take month wise. Okay, so for tax period we'll have to see turnover. Turnover is to turnover. So whatever is the turnover, this amount of credit for a month we'll calculate for, say if the tax period is month, so we'll take full credits for the month. Whatever inputs E come into the factory for the whole month, we'll keep on taking credit, and then that whole amount for the month will be segregated in the ratio of turnover. Okay, simple logic. It will be segregated in the ratio of turnover of exempt supplies is to turnover of taxable supplies. So in turnover the ratio is simple. E is turnover of exempt supply, F is total turnover. So what you have to do is E upon F. So this calculation E in formulas, E will be called as, oh my god, E is called as turnover of exempt supplies and F is called as total turnover. So total turnover means taxable plus exempt. So what we'll have to do here is 100 into E upon F. Okay, so that will give me the proportion of credit in relation to exempt supplies, right? So whatever it comes here, then these two amounts have to be reversed because you have already taken the credit. So these two amounts have to be reversed, ITC reversed. How? By debiting the electronic credit ledger. So these two items will be debited to the electronic credit ledger. And then of course you have to mention all these things in the returns. Okay. And the amount which is in relevance to taxable supplies, this credit is allowed finally. So final credit allowed is this much and this T4 of 100 rupees. These two are credit allowed. Understood? So you can write down this also. Very simple logic defined by the rule. Proportion of turnover. Great. So finished. If not, then pause the lecture and take it down. We'll move ahead. So now come down to rule 42. So now let's see all these points: A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V, W, X, Y, Z. Haha. Let's see. A. The total input tax. Total input tax means of all the inputs taken together. A, B, C, D, E. All 5 of them. Involved in inputs and input services. So we are talking about inputs and input services, not capital goods. 42 is not for capital goods. This is inputs and input services. Capital goods will come under 43. Okay. In a tax period, so tax period means month or quarter as the case may be, depending upon what is your tax period. The period for which you are liable to pay tax is called as tax period. Normal assessees are liable on monthly basis, and some people, small sector undertakings, are liable on quarterly basis. So total input tax will be called as T. Then out of T, B point says out of T, the amount of input tax out of T attributable to inputs and input services intended to be used exclusively for the purpose of other than business, means non-business, we denoted as T1. Right, we have written T1 for non-business use. Great. Then the amount of input tax out of T attributable to inputs and input services intended to be used exclusively for affecting exempt supplies be denoted as T2. So items which are going to use exclusively for exempt supplies will be called as T2. This also we have written in the chart. Very good. Then the amount out of T in respect of inputs and input services on which credit is not available under 17.5 be denoted as T3. So this is what? Blocked credit. So these three, T1, T2, T3, they will be reduced from T. T is the overall. Out of that you reduce these three items. Okay. So out of 500 we'll deduct 300. Means no credit is allowed for these three items. No ITC. Okay. No ITC. Then what to do? In E clause it says the amount of input tax credit credited to electronic credit ledger be denoted as C1 and be calculated as C1 is equal to T. T means 500 according to our example minus T1, T2, T3 means minus 300 is equal to 200. So 200 is the amount that you will credit to your electronic credit ledger, means availment of credit. How much credit will avail? 200 rupees. What is included in this 200? Two things are included in this 200. One which is exclusively for taxable supply, which we will call as T4, and the remaining is common. Okay, so two things remain. Then clause F says the amount of input tax credit attributable to inputs and input services intended to be used exclusively for affecting supplies other than exempt means taxable supplies, including zero rated supplies. Okay, this I had explained. Zero rated is entitled for credit. Be denoted as T4. So T4 is an amount which is exclusively allowed as credit. Okay, there is no problem there. It is fully allowed. Then there is an explanation which is given in your book, which is inserted. You strike it off and write down not in course. Okay. This is with regards to real estate transactions, and real estate transactions are not in course as announced by ICAI. So good for you. Then what we'll do is G point. G point says T1, T2, T3 and T4 shall be determined and declared by the registered person at the invoice level in GSTR2 and at summary level, means consolidated amount, for a month in GSTR3B. So GSTR2 is the invoice wise details that we submit, the inputs. So when we purchase inputs and we have all the invoices, so in that itself we'll mention that these are exclusive items for 1, 2, 3, 4. And in GSTR 3B that we'll file on monthly or quarterly basis, we'll mention the summary, the total of the whole month. Then the input tax credit left after attribution of input tax credit under clause F shall be called common credit. So after you reduce this, F means T4. So after you deduct T4, the balance is called as C2. So C2 is C1 minus T4. C1 was our 200 that we have credited to electronic credit ledger minus T4 100. This 100 which will deduct your T4 is fully allowed as credit. So against this clause F, you write down full ITC. Full ITC allowed. So now what we are remaining with? We are remaining with 100. So that will be called as C2. So C2 is the common credit. C2 is called as a common credit. So 4 items which are exclusive are taken out. 3 exclusive and 1 blocked are taken out. So what remains is common. This common will then have to be divided in 3. The non-business use, the exempt use and taxable use. So first formula is given in I, which is in respect of exempt supplies. So see, input tax credit attributable towards exempt supplies is denoted as D1 and calculated as D1 is equal to C2 into E upon F. Though the formula is given in the opposite way, E upon F into C2. You can write in simple words C2 into E upon F. Means the common credit, C2 means the common credit. Okay, common item, into E. E means turnover of exempt supplies, and F means total turnover. So that is simple logic. Even if you forget this formula E upon F, you can always calculate. As a student of CA final or inter, as the case may be, I don't know what you are, but you can easily calculate, right? So E given there is the aggregate value of exempt supplies during the tax period, and F is the total turnover in the state during the tax period. Okay. Then there is another proviso, you have to strike it off. It is again for real estate. So strike off this proviso also. And on the next page you will find that E, F, explanation 1, explanation 2, this whole thing, strike it off, write down not in course. Then another proviso is given there, this is in course, provided further that where the registered person does not have any turnover during the said tax period or the aforesaid information is not available. So in that tax period, like for example, you are bringing all these inputs into your factory in the month of January, but in January there are no output supplies. There is no supply in January. So I don't have turnover of January. Or even if there is supply, but I don't know the turnover, it is not calculated yet. Then what I can do is, I can use the turnovers of the preceding tax period. Or if not available, then preceding to that. Whichever is available closest, that will take as E upon F. So it says that if you do not have any turnover during the said tax period or the information is not available, the value of E upon F shall be calculated by taking values of E and F of the last tax period for which the details of the turnover are available previous to the month during which the said E upon F is to be calculated. So if I want to calculate for January but I don't have the information of January, I can take off the last December, or if not available then November. Okay. An explanation says that for the purpose of this clause it is hereby clarified that the aggregate value of exempt supplies and the total turnover, that is E and total turnover F, shall exclude the amount of any duty or tax levied under entry 84, 92A of the 7th schedule to Constitution, list 1, and 51-54 of list 2. What does this mean? This means that if some of our goods, like for example liquor is chargeable not in GST, as you know, it is chargeable to state excise duty and VAT also. So for example, okay, I'll exclude this. Okay, so there may be goods or services which are liable under central excise duty. Central excise duty was chargeable under that 84, entry number 84 to list 1 of union list of the Constitution. Then service tax was leviable under 92C. Then state excise and state VAT, these were the old laws, right, leviable under 51-54 of the state list of the Constitution, 7th schedule. So if you are providing some goods, it means some of your output supplies are chargeable to these or any of these, okay, then while calculating the turnover, so for example, if the sale price of that item was 1000 rupees and you have charged state excise or central excise, as the case may be, excise duty, service tax, state excise, VAT, and so on and so forth. So these amounts must have been charged now. Suppose 100 rupees is charged here and VAT is also 200 rupees or whatever, any of these. So your total bill amount, or rather the invoice amount, would have been 1300, right? So while calculating turnover, will we take turnover as 1300 of exempt, means in numerator 1300, denominator total turnover 1300? No. Government has said that these amounts of excise duty, service tax, state VAT or state excise duty, these are not to be included in the definition of turnover. So we will include only 1000 rupees as value of exempt supply as well as in total turnover. So only 1000 rupees will be considered, and 300 rupees, which is of these nature, the tax nature, is not to be included. Means you have to take turnover net of tax and not gross of taxes, right? Very good. So this is what it says, explanation. Then clause J, the next one, is for that non-business use, because some part of that common goods is also going for non-business use. Like I told you, the sugar is used by my wife also for preparing food and drinks at home, okay, or tea, coffee. So in that case, we will assume it to be 5% of C2. C2 is that 100 which is left. So 5% will be deemed to be towards private use, and that will also be disallowed. So you have got two things, D1, D2. In a chart, we have not mentioned D1, D2, this chart which we have made, right? This chart we made. So this out of 100 is C2, okay? This 100 is T4 and C2, and out of C2, for exempt supplies, this is called as D1, and for non-business use, this is called as D2. So you have to reverse D1 plus D2. So D1 is calculated as E upon F, C2 into E upon F, and D2 is deemed to be 5% of C2, deemed to be 5%. So that is given here in clause J, that the amount of credit attributable to non-business purpose, if common inputs and input services are used partly for business and partly for non-business use, be denoted as D2 and shall be equal to 5% of C2. Now this 5% will be calculated only if that input is used for personal purpose also. If there is no personal use, then you will not disallow 5%. Okay. Then the remainder of the common credit. So remainder of common credit will be called as C3. And this is the remainder for taxable supplies and zero rated supplies, right? So this will be called as C3. In our chart, C3 is this. So this remaining is C3. Okay. And this C3 is entitled for credit. So what is entitled for credit? T4 and C3. This is T4 and this is C3. These two amounts are allowed as credit finally, after all disallowances. But since we have credited C2, since we have credited actually C1, therefore what we have to do is this much is to be reversed. So this much will be reversed from electronic credit ledger, means debited to electronic credit ledger. So that is given now further. So now it says in point number L that the amount C3 D1 and D2 shall be computed separately for input tax credit of central tax, state tax, union territory tax and integrated tax, obviously. So for central, state, union territory and integrated we'll calculate separately. And for each type of credit we'll make E upon F, E upon F separate calculation and declare it in form 3B or DRC3. There is another form, DRC3, so you can file that also. And the amount equal to D1 and D2, aggregate of D1 and D2 shall be reversed finally by registered person, and that also you will show in form GSTR 3B or DRC3. Provided that, so reversal means what you will do is you will debit to electronic credit ledger. Okay. And provided that where the amount of input tax relating to inputs and input services used partly for the purpose of other than business and partly for exempt supplies has been identified and segregated at the invoice level by the registered person, the same shall be included in T1, T2 respectively, and the remaining amount in T4. Now what this proviso says, this proviso is very important. It says alternative method. It gives an alternative method to this whole calculation that we have seen. What it says, see here the problem was that since E, in our example, since E when it was received in the factory means the sugar, we have not segregated it. We have taken full sugar and kept it in stock, and we took full credit of 100 rupees. So this 100 rupees was taken as full credit, and then after the end of the month we reversed part of it, right? D1, D2 we reversed. So this is one way of doing it. First take full credit and then see how much it is used for exempt supplies and how much for non-business use, and then reverse. Alternatively, what you can do is that when this C is received in the factory, when sugar comes into the factory, at that time itself we will segregate that into different use. That how much sugar will be taken by wife for non-business use, NB, how much we'll use for making Roshagullas, means for exempt supplies, and how much for taxable supply. If we do this at the invoice level itself, so invoice is one, but we cut down that invoice, we mention it there in the stock statement also, as well as in our GSTR 3B and GSTR 2. If we mention it separately, that out of this whole, say for example we have purchased 100 kilogram of sugar. So if I say that out of this 20 kilogram is for personal use, 20 kilogram for Roshagullas, and balance 60 kilogram for Gulab Jamuns, then what we do is that this much part which we have said to be non-business use, this will be added to T1 and no credit will be allowed. So this will go as T1, this will go as T2, and this will go as T4. So these two proportion T1, T2 will not be allowed as credit, and T4 will be allowed as credit. So then credit taken will be this T4 of out of the common and this T4 D. So two credits will take, and then there is no need to reverse anything. Then at the end of the month there will be no reversals. So you take only that much which is going to be used for making taxable supplies, that's it. Then you don't need to reverse anything. So two alternatives are there. First take full and then reverse at the end of the month, or take only that much which is to be used for taxable supplies. But this second alternative is slightly difficult in practical sense, because in the industry there are thousands of common inputs, and at the time of receipt we don't know, we cannot say how much is going to be used for which purpose, right? So though theoretically this is simpler, that segregate the input at the invoice level itself, but practically it is very difficult. So therefore in practical life you will follow full credit and then reversal system. At the end of the month when we have the turnovers in hand, we'll do the reversal. that is more practicable. Then subsection 2 says, in that you cut down the first part of that, the first line, except in case of supply of service in clause B of para 5 of schedule 2 of the act. This line up till here you got it, because this is for real estate which is not in course. Now continue. So what happens? The input tax credit determined under sub rule 1 shall be calculated finally. So what we have calculated here and reversed is on monthly basis. So every month we'll reverse depending upon turnovers of those months, right? But now when the financial year will come to an end, you have to make a annual calculation, and that will be final calculation of reversal. Okay, so calculated finally for the financial year. So we'll have to make full calculation for the whole financial year. Up till now we have made calculation on monthly basis. Now we'll make it on full financial year. Before, when do you have to do it? Before the due date of furnishing the return for the month of September, means the coming September. Year ends in March, coming September, following the end of the financial year to which the credit relates, in the manner specified in the said sub rule. So here is our financial year consisting of 12 months. I don't know, 1 2 3 4 5 6 7 8 9 10 11 12. So these are the 12 months of the financial year. We kept on reversing. We first take full credit and then reverse. Credit taken, reverse. Credit taken, reverse. Credit taken, reverse. So we are doing it for every year. Reversal, 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 reversal. Okay. Now when the year ends and you have to file the return for September. So due date of September return, which is 20th of October basically. September return. Okay, that is GSTR 3B for September. So before that date, that is 20th of October, you have to make a annual calculation of these reversals. So what we'll do, we'll take C2. C2 is the common credit taken for the whole, means on monthly basis for the whole year. So we'll add up the 12 figures, so we'll get full year. Then we'll take E upon F. So E will be taken as full exempt supply turnover for the whole year, and F would mean annual total turnover, and we'll recalculate it. So that's what we have to do. That is a reconciliation for the whole financial year, and it is very simple. Let me tell you an example how it will happen. So I'll just calculate for C2, right? C2 is the common credit, right? So here is the month. So, and C2 is the common credit. Then you have got, you divided C2 into 3 elements. One was for non-business use, which we call as D2. Then exempt supplies, that is E upon F, and the remaining for taxable supplies, which we called as C3. Okay, so now every month, like for the month of April, if the common credit was say 100, you took 5%. D2 is always taken at 5%, so this was 5 rupees. Then you took E upon F. So E was taken as turnover for April, right? Exempt turnover of April divided by total turnover of April. Similarly, in May, if 2000 rupees was the common credit, 5% will go as D2, means 100, and here you will take exempt turnover of May divided by total turnover of May. So now you are understanding what happens is that this proportion of April might be different from May. every month, it is not that we are making same proportion of exempt and taxable supplies. In some month the exempt supply may be more, in some other month the taxable supply may be more. So these percentages, basically exempt upon total means a percentage. So this percentage was say 12% in April, 16% in May, 21% in June, and so on and so forth, right? So every month the percentage is fluctuating, it is slightly different. As far as D2 is concerned, this is going to remain same because it is 5%. So now this will go on for all 12 months, and then at the end of the year we'll take annual C2, means C2 of whole year. So that is simple, you add up the C2 of each month, so you'll get for the whole year, right? Then this 5% of the C2 will remain same. This is also total of the whole year and will remain same because every month you have taken 5%. If of total also I'll take 5%, that is going to be same. So this is my D2. It will remain same as the 12 aggregate D2s of 12 months. But this D1 will change because now I'll take C2 of the whole year into exempt turnover of whole year, financial year, divided by total turnover of financial year. So as you can see, this 12%, 16%, 21%, these are different figures for different months. But now if I calculate for whole year, this might be a different percent. It might be say 17.2%. Okay, so the figure that I'll get here, D1, will not equate to total of D1 of 12 months. Are you understanding? This will not be equal to the total of D1 of each of the 12 months. It will not. This will be something different. So now what I have to do is I have to aggregate this D1 and D2 for the whole year. This will give me total reversal for financial year. Okay, and we'll compare this with the amount reversed in every month. So whatever amount, aggregate of amount, I'll write down aggregate of amounts reversed in every month. We'll compare these two. Now when you compare these two things are going to happen. Either, okay, let me write down the figures also so that you'll understand. So this D1, D2 is final reversible amount. Okay, now this comes to say 12,000. We'll compare this with aggregate of reversals in 12 months. So it is possible that we have reversed 11,000 in these 12 months, aggregate of reversals, or it may be that we have reversed 13,200. Two possibilities are there. Means less than 12 or more than 12. 12 is the reversible for the whole financial year. But if we have reversed less, then we have to reverse more. So 1000 is to be reversed further. So what will happen? This will be debited to electronic credit ledger. So 1000 will be further reversed, means debited to electronic credit ledger. And if we have reversed more than what we are required to do, we have reversed 1200 more on monthly basis, but on annual basis we came to know that we have to reverse only 12,000, but we have reversed 13,200, means we have reversed more. So what you do? Avail credit of 1200. So here we will credit this amount to electronic credit ledger. So this you have to do before the due date of filing the return for September month, that is before 20th of October. Understood? So you can take down this also. Pause the lecture. First take down this much. Pause it and take down this much. And then the adjustment. Simple. So that is given there. See. So you have to make calculation for the financial year. First, that is given. And then it says, and A, where the aggregate of the amounts calculated finally in respect of D1 and D2. So difference will be in D1. D2 will not differ. Exceeds the aggregate of the amounts determined under sub-rule 1, that is on monthly basis, in respect of D1, D2, means if final is more and what you have done on monthly is less, then such excess shall be reversed by the registered person in form 3B or DRC 3 in the month not later than September. Okay, so till September you have to do this from the end of the financial year to which the credit relates, and the said person shall be liable to pay interest on the said excess amount at the rate specified under section 50 subsection 1. Interesting part, you have to reverse this along with interest for the period starting from 1st of April of the succeeding financial year till the date of payment. Means if suppose you reverse in August month itself, so from 1st April to the date of reversal, means the date of debit to electronic credit ledger, we'll have to reverse along with interest. Interest as given in section 50 subsection 1, that we'll see later on, the rate of interest. And second point says that where the aggregate of the amounts determined under 1, means on monthly basis, as D1, D2 exceeds the aggregate of the amount calculated finally, means annual, of D1, D2, means monthly you have reversed more as compared to final, then such excess amount shall be claimed as credit. How do you claim credit? By crediting that difference to electronic credit ledger. Simple. And this also can be done not later than the due date of September month. Okay, so you have to show it in the returns of, you can show it in the month of April itself, April, May, June, July, August, September. Then subsection 3 fully cut off, 4 fully cut off, 5 cut off, 6 cut off. These are not in course. Good for you. They are real estate related transactions, not in course. The next is 38. 38 is for banking company. As we saw, banking company is governed by subsection 4, right? So this is for that. The banking company or the financial institution, including NBFC, engaged in the supply of services by way of accepting deposits and loans and advances, chooses not to comply with the provisions of subsection 2 of 17 in accordance with the option permitted under subsection 4, that is 50% option. As I told you, they have two options, either go for actual reversal or go for 50%. Shall follow the following procedure. So if they go for 50%, then what is the procedure? The said company or institution shall not avail the credit of the tax paid on inputs and input services that are used for non-business purpose, obviously. Secondly, credit attributable to supplies under 17(5), that is blocked credit. So these two credits are not at all allowed, not even 50%. So non-business use exclusively no credit. 17(5) block credit, no credit. Secondly, the said company or institution shall avail the credit of tax paid on inputs and input services referred to in the second proviso to subsection 4 of 17 and not covered under A. That's okay. Then 50% of the remaining. This is that branch to branch. As I explained in the last lecture, branch to branch is 100% allowed, not 50%. That is 100% allowed. And 50% of the remaining amount of input tax shall be the input tax credit admissible to the bank or institution, and that will be mentioned in GSTR 2. Simple. And clause D is of no use because this is also out of course. Section 41, 40 to 43. So forget it. So this was for inputs and input services, right? Quite a big one. So take a break, and in the next lecture we'll see rule 43, that is for capital goods. If the capital goods are used partly for non-business, partly for business, and partly for exempt supply and partly for taxable supply, then how much credit is to be allowed and how much to be disallowed.